If you're interested in hiring a fee-only financial advisor and aren't sure where to look and how to narrow down your list, in this video I'm going to go through how you can find a list of fee-only financial advisors and then how you can interview them to hire the one that's right for you. Welcome back. This is episode 203. This is part 3 of my 5-part series on financial advisors. And last week we discussed the different types of financial advisors that are out there and why I believe that the fiduciary model is best for you. And this week we're going to discuss how to put together a list of fee-only financial advisors to work with, and then once you put together that list, how to interview them to determine who to hire. And I'm doing this series on financial advisors to celebrate the release of my first book. My new book is called Fiduciary: How to Find, Hire, and Establish an Aligned and Trusted Partnership with a Fee-Only Financial Advisor. And I'm sharing with you over this series on financial advisors some of the information that is in the book. And it's available for purchase on my website. You can head over to retirewithryan.com and click on book. And if you're considering hiring a financial advisor for the first time, or you're wondering if the financial advisor that you've worked with for a while has your best interest at heart, then you should definitely check out this book. So last week, I established why I think you should work with a fee-only advisor. That's what the fiduciary model is, an advisor that's working on a fee-only basis. And as a fiduciary, your advisor has a legal obligation to put your interest ahead of their own interest and disclose any conflicts of interest that might exist. And as the name fee-only denotes, they are only compensated from the work that they do from the fees their clients pay them. They don't receive any commissions or kickbacks from any of their work. Unfortunately, all other non-fee-only financial advisors don't have a fiduciary obligation. Now, some may tell you they are a fiduciary, but if they have a broker-dealer license, an insurance license, or they receive any compensation or kickbacks from the recommendations they make to you, or from any investments they may put you in, then they are not a true fiduciary. The term fiduciary is definitely a popular phrase in the financial advisory world right now, and consumers are starting to wake up to the benefits of working with a fiduciary advisor, which is wonderful. Unfortunately, I have seen many non-fiduciary or non-fee-only advisors telling prospective clients they are a fiduciary. Some are even as bold as to put on their websites that they are a fiduciary when they clearly are not. So it's up to the regulatory bodies who oversee financial advisors and brokers to ensure that advisors aren't misleading the public about the misuse of this title. And I have been seeing fines and suspensions being issued to clients, issued to firms that mislead clients who have unethical business practices or have violated their fiduciary obligation. However, this usually comes after the fact, and despite this, many fines that we're seeing, I feel that the financial regulatory bodies are really not doing a good job of protecting the consumer. If they were, we wouldn't be continuing to see these cases popping up. So if you follow the steps that I lay out in the book, as well as what I'm going over in this episode, in this series on financial advisors, then you will have an excellent chance of hiring a real fiduciary advisor and not being taken advantage of. So the first thing, as I mentioned, is you need to compile a list of fee-only financial advisors. And there's definitely some questions you have to ask yourself before you begin to put together this list. The first question is, are you someone who wants to work with a local advisor? Do you want to go meet with someone in person? Or are you okay with meeting with someone over Zoom or doing business with them over the telephone? Because obviously, if you are willing to work with anyone in the United States, that would expand the potential list of advisors that you could be selecting from. So next is there a specific specialty that you're seeking? Meaning, are you looking for help with retirement planning? Do you want someone who specializes in college planning, if that's what you're after? Do you have a very focused job? Do you run a small business? Are you maybe an executive, or do you work at a large company? There's lots of specialties out there, and there's advisors that just specialize in very narrow niches. So as I've talked about before, my specialty is retirement planning for people over 50. So if you have something very specific, that can also help you to narrow down your list. And if you're also willing to work with someone anywhere in the United States, that's also going to help you to more easily find someone with a specialty if that's what you're looking for. If you're looking for more of a broad help, as in retirement planning, a lot of advisors deal in retirement planning. You shouldn't have a problem finding someone local to you if that's important that specializes in retirement planning. So Google can definitely be your friend. Google is great at finding things you're looking for. So one thing you could do is if you have the specialty you're looking for, you could type that in, like college planning advisor near me or retirement planning advisor near me. That could be a starting point. You could also Google fee-only advisor near me, and you could see what pops up. But I will say that finding fee-only advisors near you is definitely a challenge because there's not one website you can go to where you're going to be able to find all the fee-only financial advisors in the United States. There are definitely some websites that I'll talk about in a minute, but there isn't one that you can go to where you're going to find all of them. So one good place to look is that you can go to the Certified Financial Planner Board of Standards website, and that is the CFP designation. I've talked about that before. That is really the gold standard in personal financial advice, personal financial planning. People that have gone through and attained their CFP designation are very serious about helping their clients. And you can pull from a pool of around 100,000 certified financial planner practitioners that are available on the CFP website. So if you go to cfp.net, you can then click on Find a CFP, and you can use their screening tool to find a certified financial planner. Now, one thing I don't love about the CFP board, now I am a member and have been for a number of years, is that they allow both fiduciary and non-fiduciary advisors to join their organization. Now, there is a CFP code of conduct, and in that you're supposed to always work as a fiduciary. But I personally think it's difficult to do if you're carrying a broker-dealer or an insurance license. So my preference would be that if you do work with a CFP, you work with one that is a fee-only CFP, and there are lots of those out there. Unfortunately, the CFP website does not allow you to easily filter out fee-only and non-fee-only CFPs. So if you do find your advisor from the CFP website or the list of advisors, you need to take some of the next steps that we'll discuss as far as then further screening out that list to find a fee-only advisor if that's what you're looking for. So again, on the CFP search tool, find a CFP, you could put in your local area, you could put in like within 10 miles of your location, and then you can see what pops up. And you also can put in a specialty. You can put in a specialty without any location, and it'll give you a list of all the advisors in the entire country. The problem is I put in like retirement planning just to see what would pop up without any location. And there was, I put in, small business owners help. And there was like 10,000 names that came up. So that wasn't very helpful. So definitely filtering it out. You can do it by location. You could do it by specialty, but that's potentially going to leave you a large list of advisors. So another website you can go to is something called the NAPFA. And that's an organization of fee-only financial advisors. However, that isn't every fee-only financial advisor because there's a significant cost to be a member of this organization. It's $700 a year. I'm personally not a member of it because it's a large cost. Just to be a member of the CFP organization is about $500 a year. So if you're a member of both, you're already paying a lot of money. So it is a way that you can search, but again, it's not going to give you every financial advisor that's a fee-only advisor. That's where maybe the CFP searching in your local area could be helpful. And then from there, I'll detail a few steps how you could then filter out which one of those are fee-only advisors. There's also a couple other organizations that have members of just fee-only advisors too. There's something called the XY Planning Network. Though if you go to xyplanningnetwork.com, that's a list of fee-only financial advisors. There's also something called the Fee-Only Network, feeonlynetwork.com, also a list of fee-only financial advisors. And there's another one called the Garrett Planning Network, which also is a list or membership of fee-only financial advisors. So again, as I said before, there's not a one-stop place where you can go, that it's an entire listing of all fee-only financial advisors all across the United States, and then you could filter by location or specialty. You have to do a little bit of work to get down that list, unfortunately. But these are good places that you can go and that you can start with. So once you've put together a list of advisors, now you need to start to do a little bit of research on them to see if they are actually a real fiduciary advisor. And first thing that you can do is you can go to their website. You can poke around a little and see what's on their website. If they state that they are a fee-only advisor, hopefully they're telling the truth, but you'd still want to confirm that. You can also look on their website to see how they work with clients. If you're looking just for financial planning, do they offer just that? Or are they more of an ongoing wealth management advisor where they're really only offering ongoing advice, which generally also requires them to manage your investment portfolio? So you'd want to find out what they offer, and you can glean a little bit of that from their website. The next thing is that you'd want to research them and research their background a little bit. So one place that you could go is to a website called BrokerCheck, where you could look them up. So this website is brokercheck.finra.org. And if you find them on that website, that's telling you that they are registered as a broker, as a stockbroker. This is a stockbroker website. So you don't want to find them on there. What you really want to find is something that tells you they were previously registered as a broker and directing you to go to the next website I'm going to mention in a minute. And that's what you would find if you looked up me, for example. You put my name, Ryan Morsi, into BrokerCheck, and you're going to see that I was previously registered as an advisor. And this is the case, or as a broker. This is the case for many financial advisors who have been in the business for a long time. Many of us started with very large broker-dealer firms, and we got both our broker-dealer and our investment advisor license. So at some point, they made a decision, as I did, to terminate the broker-dealer license, so they're showing up still on the broker-dealer website. And the next website that you want to go, if you either don't find them on BrokerCheck or it's directing you to go to the other website, is advisorinfo.sec.gov. And again, I didn't mention this earlier, but all podcasts that I do, any links can be found in the show notes of those episodes. So if you go to retirewithryan.com/podcast/203, because this is episode 203, that will take you to the episode notes, and you can then find the links that I'm mentioning, because many of you are listening. So advisorinfo.sec.gov, this is a website where all registered investment advisors are listed, as well as the people that work for their firms, the financial advisors, and they are known as investment advisor representatives, or IARs, of these firms. And in their purest form, a IAR is a fee-only advisor. That's what a registered investment advisor is. They're registered under the Investment Advisor Act of 1940, which is where they're not paid commissions, they're just paid fees to work with their clients. However, you can be registered as both a broker and a registered investment advisor. You can also be registered as an insurance agent and a registered investment advisor. So this is creating these additional conflicts of interest that I'd like to have you avoid. However, you might be comfortable working with a registered investment advisor who has an insurance license. But I think you really need to be careful that they're not going to be heavily selling you products that might not be appropriate, such as certain permanent life insurance or annuities. And you can avoid that altogether if you just work with a fee-only advisor. So once you've gone to that website, you then want to look up the firm and look up a document known as an ADV. This is a disclosure document that every registered investment advisor has to file. And there's a standard form with the ADV boxes and information they fill out where you can easily find out if they are registered as a broker, an insurance agent, or if they have any other conflicts of interest. And if you scroll down in this form and you find item number 6 under other business activity, if they have checked insurance agent, broker-dealer, registered representative of a broker-dealer, I would probably move on from this person because they're not a fee-only advisor. And you can also look at the other part of this. There's part 1 and then part 2. And part 2 has a form that in a little more clear English, all this is spelled out. So underneath that form, if you went down to the section that's titled Financial Industry Activities and Affiliations, that would also be disclosed. It would say whether they were a broker or whether they were an insurance agent or any other activities. Maybe they're also a real estate agent, or they also are a accountant. So that would be disclosed there. If you want to read the Part 2 ADV, you'll also find information about the services the company offers, their fee schedule, how they charge. There's a lot of good information there that you could also read. The next thing you want to do on that same website is you can look up an individual. So the financial advisor you're thinking of working with, look up them as well. And you'll get a report that pops up. And I would download that report and look it over to see what their history has been, where have they worked, and then more importantly, any disclosures or complaints that they've had. So if they have a number of complaints or disclosures about things they've gotten in trouble for, then I would probably consider crossing them off your list. So now that you've hopefully narrowed down your list, you've gotten maybe 2 or 3 advisors that you're thinking of working with, now you need to actually sit down and interview them either over Zoom or in person. And I have a list of 10 questions that I put together a number of years ago that I think you should ask every potential advisor. And I give this to any prospective client. I give them these questions to ask as well as the answers that my firm would give for them. And you can also find that out if you go to retirewithryan.com/podcast/203. You can find this list. I'll put it right there. So the first question that you would ask them is, are they a fiduciary in a fee-only firm, and will they sign the fiduciary pledge? So what is the fiduciary pledge? You can also find that in the show notes of the episode. It's a 1-page document that has a pledge that your advisor should be willing to sign if they truly are a fiduciary. Number 1, they'd put your client's interests first. Number 2, they'll act with prudence, skill, and care. Number 3, they will not mislead you, and they will provide you with full and fair disclosure of any conflicts. They will try to avoid conflicts of interest wherever possible, and they will fully disclose and fairly manage in your favor any avoidable conflicts. And I found this while doing research for my book, and this comes from the Committee for the Fiduciary Standard. It's a group of advisors that got together years ago to try to promote the fiduciary standard, and this is on their website. You can download it. I've taken it and put it on my website too, so you can easily find it. So if they won't sign this, then you're probably done interviewing this advisor. It can be a very short interview, because if they won't, then they're not a fiduciary, because every firm that is operating this way would be more than willing to sign this. So assuming they sign it, number 2, do they have any disclosures or complaints? You would probably want to ask them about them and find out what went on. There's definitely times where there could be miscommunication with a client, and it could lead to a complaint, and maybe the complaint is dismissed and nothing was really found, but you still want to be aware of it and find out what was going on. Number 3, do they have any specific certifications or designations? Are they a certified financial planner? Are they maybe have other industry designations like a chartered life underwriter, a chartered financial consultant, a chartered financial analyst? There's lots of industry designations. It's just good to know what they've achieved. And if they have other designations, it probably means they're really serious about helping their clients. Number 4, do they have any specialties, and what services do they provide? So again, if they specialize in something like retirement planning or college planning, and then what services do they provide? So do they provide just investment management? Do they also provide financial planning? Do they, how do they do that? Do they do it all, as one service, or do they separate it out? So it's good that you understand what that is, especially based on what your needs are. Number 5 is, how are they compensated for the services they provide? What is their fee schedule? I would love to see that hopefully disclosed on their website, so you would have an idea of what you're going to be paying before you considered hiring them. But if not, you could find that in their ADV, and then they should clearly explain this to you when you're considering working with them. So is it a percentage of assets relationship, and what does that look like? Do they do that and also provide financial planning under that fee, or do they charge separately for financial planning, as some firms do? So you just want to understand what that would look like. Number 6, this is really important. What other costs will I be charged? So if they have a standard fee schedule, let's say they're going to be charging you 1% to manage your portfolio, and you had $1 million portfolio, so that'd be $10,000 a year. What other costs will you incur? Well, let me give you an example. If they use mutual funds, what is the average cost of the mutual fund? Because that's a cost that you're paying every year. Inside the mutual fund, there's costs. Or are they using individual stocks or individual bonds, which might save you some money? Or are they using lower cost mutual funds or something called an exchange traded fund? And what does that look like? Because costs matter. The one thing I will say that my biggest criticism of some larger firms that do fee-based work where they're charging an AUM fee is that a lot of them are also using high-cost mutual funds. And this is hurting clients' performance. Why are they doing this? Because they're getting kickbacks from the mutual fund companies that they're recommending. And this is revenue that's coming into the firm. Now, it's disclosed, but if you didn't know this was going on, you wouldn't even know anything about this. So that's important to know what products they're using and going to be investing your money into. And also, if they're using third-party money managers, maybe they're not managing the money directly, maybe they're using another party to manage it, what is that additional cost for that money manager? To really, so you know as a consumer, what's your all-in cost that you're roughly going to be paying every year? Number 7 is, what investment philosophy do they follow? Are they trying to beat the markets with a lot of turnover? Are they using more of a passive strategy where they believe in indexing? Are they using a combination of the two? This is just important to know because you should have an idea of what it's going to look like with your portfolio. And also, do they have any past performance that they can share with you? So if they can share with you past performance, and obviously past performance is no indicator of future results. What happened in the past might not happen in the future, but at least it gives you a framework of how they've done, and you can hopefully have some repeat of the same process they've used that would help you to get similar results. Number 8, where do they keep their clients' money and how can you see it? So who's their custodian? I've mentioned that I use Charles Schwab to hold my clients' money. They're a very large company. A lot of advisors use them too. Maybe they use Fidelity, maybe they use Pershing, or maybe they work for a company where they're a broker-dealer also. So like they work for a large firm like a Morgan Stanley, they would then be holding the money. So it's just important for you to know where the money's going to be and how you can see it. You don't want to become a victim of Bernie Madoff, a repeat of Bernie Madoff, I should say, because you don't want to have the advisor holding the money. You want to have a third party holding the money so that there's accurate record keeping and there's no funny business going on there. Number 9, how often will we communicate and how will we communicate? So what is their schedule? How often do they meet with clients? Do they meet with clients once a year? Do they meet with clients twice a year? What's their schedule? And can you only email them? Can you call them? This is really just important for you. I mean, I would think at least once a year, probably twice a year would be sufficient. Maybe you want to meet more frequently in the beginning if you're doing more financial planning. So that's important to know. And then the last question I would ask is, how long has your longest client been with you? And how many clients do you advise? So you probably want someone with some experience if you're going to be entrusting your life savings to them. Hopefully they've been working with clients for a number of years, probably 5 to 10 years or longer. And how many clients do they manage is important, because if they manage 400 clients, then it's probably going to be hard for you to get the service that you want. I would say you'd be looking for them to, as an advisor, personally manage less than 200 clients, because 200 is still a lot, but with the right systems in place, they should be able to give you adequate service. And do they have any other members of their team that are going to be helping you? Because that's important too. So if you go through this process, I know this is extensive, this is a long episode, but first, filtering out to find advisors that you think are a fit for you, doing a little bit of research by looking up their websites, looking up their firm ADV to figure out that they're really fee-only advisors, that they have the service you are looking for, and then interviewing 2 or 3 of them should help you narrow down your list and help you make a decision, because ultimately you need to hire someone. And you want to do this work now so that this relationship pays you over time to have, a good advisor working for you who's honest, fair in what they do, discloses any conflicts of interest, is going to be managing your investments for you in a prudent fashion, keeping an eye on costs and looking to keep more of your money in your pocket so that this is a long-term thing and you don't have to change advisors again because you hired the wrong advisor and there was something going on there that you didn't really investigate, and ultimately it caused, a bad outcome for you. So again, this is a series, and next week we'll be continuing the series, and we'll be discussing, once you've chosen the advisor that you want to work with, what does that relationship look like? What is the process of starting to work with them? And then over time, how do you really keep an eye on, what's going on to ensure that you're getting value out of this relationship. So I hope this episode was helpful. And don't forget to head over to retirewithryan.com to check out my book if you haven't already, and also to check out the episode show links if that's something that you're looking to do. Have a great week, and I look forward to talking with you next Wednesday. Take care.